Hello, Benji. Thank you so much for the introduction. This is one of my favorite topics. Tax myths in the hood. These are the things that pop up that kind of bother me and will, in the end, interrupt refunds. So I like to deal with it, like to correct some of this stuff, okay? So, like I say, it's about, like I always say, it's about being right with the IRS and being right with the state. I don't care what you hear on the news. The IRS and the state regulators are here to stay. They're not going anywhere. We need them to protect our country's bank accounts. We need them to protect our bank accounts, and we need them to pay us our refunds. So let's play nice, okay? Okay? The main reason why I'm doing this topic on this channel is because the urban community is ripe with low-income taxpayers. The community is ripe with dependents, and we want to keep those refundable credits, those refunds, coming. Problems with the IRS because of these tax myths will interrupt refunds. Before I talk about the myths, I want to make sure you understand what problems with the IRS mean, okay? It could mean your refund's going to be slow. It could mean that your current refund is going to be a no. It could be that your next year refund is going to be a no. It could be that you get a letter saying they want last year's refund back, and they're going to add on to that interest and penalties. Okay. Nobody knows for sure what the IRS audit selection is, what their criteria is. We're all kind of guessing. You know, some things make sense, some things don't make sense. I assure you of one thing. It is principally based on data and analysis. Doesn't matter where you live, what color you have, skin you have. It's about data and analysis. It's based on standards and averages, and most importantly, mistakes that the IRS has found in the past. Okay. Like just as if there's an area where there's a lot of mistakes, I assure you they will pound that area. Okay. After thousands of audits, if the IRS finds that there's a problem in a particular area, they're going to hit it. Okay. As an example, this is just as an example. This isn't really a urban topic, but just as an example. Okay. So if the IRS finds out that, or sees that 70% of the population doesn't do the home office deduction correctly, what do you think they're going to do? They're going to look for people that are trying to take that deduction, the home office deduction, and ask them questions. Why? Because it's probably or possibly a layup, because people screw it up. Maybe it's too complicated. It's probably that it's too complicated. But if they see it, there's a likelihood they're going to look at it. Okay? So they're going to compare you to a standard and see how far away from the standard you are. Again, I'm going to use another example. I like to use this example with my clients that itemize. Okay? Less than 10% of the population itemizes, but I'm just giving you this as an example, okay? So if you're deducting, as an example, $10,000 in charitable contributions, no, I'm sorry, I'm gonna not say here we go. Let's say you're deducting $10,000 in medical deductions, okay? And the IRS would know that filers in your filing group, people similar to you, typically average $3,000. What do you think they're going to do? I'll tell you what they're going to do. They're going to send you a letter. They're going to ask you a question. Your time may be up today. It may be up tomorrow. They may look for a pattern. But what they're going to do, they're going to want to find out if you're sick, you have bad health insurance, or you just not be understanding that you do not deduct reimbursed health costs. Okay. All right. Now, so they're going to look at things on your return that they've looked at many times and that have been wrong by other people. And then they're going to take a calculated guess and then go to you. Okay. They measure all the little mistakes that you've made before. They'll give you a score, and they will wait, or they may not wait, to pull the trigger. Lots of metrics, lots of scoring behind the taxpayers, and also the tax preparer. The tax preparer. Everybody in the room is scored. Don't make that mistake. Everybody in the room is scored. So the first thing, I've come up with basically 5 myths. These are the big myths. These are the ones that always pop up. These are the ones that kind of either like give me a chuckle, okay? And like I say, some of this stuff I'm gonna say it in a way, maybe it's gonna be funny, maybe it's not gonna be funny, but don't get it screwed up. It's all gonna be very, very serious, okay? This stuff is serious, okay? Myth number 1, I can use that W-2 next year. Hell no you can't. Hell no you can. I'm going to use that W-2 next year. No. It's based on the year that W-2 goes on that year's 1040 or that year's 1040X. And there's a reason, especially in the urban community, why that's so important. Because most of the refunds are based on refundable credits, particularly the earned income tax credit, the credit for the working poor. So that refund, that amount, and that credit's refundable. Everything that is calculated, bam, that shows up as a refund. It could go against your taxes or it could go right in your pocket. But that refund, okay, is based on your income and your filing status, okay? If your income is $15,000, depending on your kids, your credit, your refund is going to be X dollars. If you didn't want to wait for that $2,000 W-2 and not include it, that could very much change your refund. The IRS doesn't like changes in the refund. And they will get that W-2, okay? And you will forget that you were jonesing for that refund in February, okay? That you had, you're probably going to forget that you had problems with your mail and so it didn't come. But a year from now, the IRS is going to sit there and say, okay, I have this young lady's tax return. She's got one W-2 there, but I had gotten from her employers 2 W-2s. Huh. Let me see what that does to her refund. I'm going to send her a letter. Okay? It doesn't always change the refund, but it could, and it usually does. Okay? That was myth number 1. Okay? Use all your W-2s. You want to file a complete and accurate tax return. Okay. This other one is a little, this one's important. This is myth number 2. Okay. Oh, I can claim my godchild. I can claim my girlfriend's child. I have their information. Quote, unquote. Hell no. Not to get the refundable money. I don't know what tax school you went to, but that one's not going to fly. The IRS does not care about religious relationships or boyfriend-girlfriend relationships. They don't care if you have the same last name. They don't care if you're having sex with the mother. They don't care how many years you've been claiming that dependent. They don't care that you've been paying child support. They don't care that you bought the baby sneakers. So it's about, to get the money, it's about 2 big things. Residency and relationship. You have to live with that child for a certain period of time. And you have to have a blood or marriage. You have to be related by that child by blood or marriage. Okay? Blood or marriage. If you're not biologically related to the child, you better have custody papers. And they better be retrievable, readily available. Always a good idea to give them to your tax preparer he'll keep them in your file. If you need them, they're there. And he also has an opportunity to pop on a tax form what he's looked at to assure the eligibility of the dependents. If he's on the ball or she's on the ball, she'll keep those records and she'll talk to those records. Okay. So one of the things I'm always going to talk about is, people claiming their niece and their niece and their nephew. Those people definitely have a higher chance of being audited. You want to know why? Okay. That's because historically, when they send a letter to somebody that's claiming his niece or nephew and ask for proof of residency, guess what happens? They can't come up with it. And so guess what happens? You got to give the money back. Okay. Or what they'll do is they'll ask for the birth certificates. They'll ask for the birth certificates, and they'll want to look at the taxpayer's birth certificate, the child's birth certificate, and the child's mother or father birth certificate. If there's some missing information, like the child's father didn't sign the birth certificate, it's not on the birth certificate, the relationship is not reconcilable, it's going to be tough to support that. So keep the supporting documents. You're getting, I always tell everybody this story. You walk into a tax office with a $10,000 W-2, the refund could be a couple $100, okay? You put without a kid, without a dependent, I shouldn't say kid, without a dependent. Put a dependent on it, a dependent that qualifies, it's easy to have that refund look like $5,000. Big difference. So let me ask you a question. If you had gotten an extra refund because of that child, you'd want to make sure you talk to the preparer about what sort of proof you should keep, so that if you do get a letter, you're ready. There's nothing to worry about. And I'll say it again, keep those documents in a safe place. They don't want to hear about a home invasion or a fire, you lost it, this and that. Keep them in a safe place where you can grab them, okay? It's got to be retrievable, okay? So that was myth number 2. Myth number three, and this one's really not that big, but I wanted to include it. I'm going to include it. Okay, quote unquote, we're married, I can claim her kids. Okay, like I say, make sure you live with those kids, okay? But also, most importantly, make sure you have a state license marriage certificate. They don't recognize religious marriages. State license, have to have a piece of paper, okay? So this one is probably the big one, okay? No, myth number 4, nobody talks about this, but this is big, okay? I also don't like to talk about this because it's kind of like self-serving, but this one's important, okay? Here it is. Oh, I'm going to do my taxes on my phone, or I'm going to have my sister, who is not licensed, do it on TurboTax. Okay, like I said, this one sounds self-serving because I am a paid tax preparer, okay? I am a paid tax preparer, okay? This is really not, you are not good. Based on certain circumstances, you are not good. You are not good. I'm going to make a couple of important points. The first thing is, this is what you have to understand. You have to step back a couple of feet, and this is what you have to understand. When taxes are prepared and they're sent in, it's basically 2 ways, okay? They can be sent in as a self-prepared return, which should have you, the taxpayer's name, on the second page, at the bottom of the second page. Self-prepared, okay? Makes a lot of sense, okay? This is when people use TurboTax and some of the software programs out there. This is what they are. They're self-prepared. Or you could be a paid preparer, and that would be somebody like me that would be going into a tax office. That person would have something that's called a PTIN, okay, or a registration number, and also an EFIN, which is a license to send the returns in electronically, okay? It only happens one of two ways. You're either self-prepared or you're a paid preparer. You're either doing it by yourself and signing the back has got your name, okay? Or you're going to a paid preparer, okay? Now let me talk about the distinction between these two, okay? The big thing is I'm gonna talk about the paid preparer because that's what I am, okay? So as a paid preparer, the IRS knows a lot about me, usually, and it's usually dependent on how many returns I've done. Okay, so if it's somebody who's doing a lot of returns, they know a lot about me. They know where to find me. They know they have my fingerprints. They know, most importantly, and this is the big thing, most importantly, they will know whether or not I am knowledgeable. Okay, big word. Am I knowledgeable about taxes? Okay. How do they know that I'm knowledgeable? Because they've showed up. They've come up. They usually like to do the interviews in person, the audits in person. Can't duck them. They're going to show up. They're going to want to talk to me. They're going to ask me questions. And they've asked me hundreds. I've been doing returns for a while. They've asked me hundreds of questions. Okay? Now, if I gave them the right answers, I'm going to still be in business. If I'm sitting there giving them the wrong answers, sweating, or saying, I probably don't know what I'm doing, okay? And I'm probably in for some, so they're probably going to ask more and more questions and want to look into more and more of my returns. They want to know if they want to assess you, either as somebody that knows what they're doing, kind of knows what they're doing, or doesn't know what they're doing, okay? So that is the paid preparer. So like I said, they've got a PTIN, they've got an EFIN, there's fingerprints, there's home address, there's one phone number, there's two phone numbers. They're trying to find me, they're going to find me, okay? So the other one is a self-prepared preparer. That's a do-it-yourselfer, okay? Which is okay, but there's a time and a place for everything. With the self-prepared preparer, what does the IRS know? Not a lot. They know that the self-prepared preparer can download a $10 program, but they don't usually know much more than that. They don't usually know that much more than that, and they don't know if they know anything about taxes. They don't know if the guy's going to worry about or the girl's going to worry about duplicate claim situations or phony deductions or tiebreaker rules, okay? So they don't know, so it's kind of limited. Because of that, and I'm going to say this a couple of times, the paid preparer is less likely, when he does a return, his client is less likely to be audited. Somebody that's doing it himself, because the IRS doesn't know their knowledge level, they're going to assess that person as kind of risky. So they're going to want to look at the return, maybe ask him a couple of questions, see if the address is any good, send him a letter, make sure the guy knows how to read, and respond to the answers. Okay? So but what it all depends about is your situation. TurboTax is great in some situations. It is, in my opinion, the wrong thing to do in other situations. Okay? Somebody without kids and just the W-2 and a 1099, let's say a 1099-G that doesn't have any real expenses going against it, is not very risky. I would do that on TurboTax. If you can read and you can put numbers in the right box, you're not dyslexic, okay? You should be okay with that. So why? Because there's not a lot of knowledge required, okay? if you don't know to make sure you have all the tax forms, you could still get a letter from the IRS. If you sat there and said, "Oh, I'm just going to use these 3 W-2s. I'm not going to use that one to change my refund," don't get it messed up. You're going to be getting a letter. They'll eventually get all the W-2s, okay, and they're going to compare it to your tax return. So, like I say, with the self-prepared, there's sometimes to do it, there's sometimes not to do it. A paid preparer, okay, is somebody that you'd want to use when there's kids on the return, there's self-employment, there's refundable credits, there's non-refundable credits, there's possibly duplicate claim situations based on your living relationship, your living situation rather. There's tiebreaker rules. It's a risky return. Somebody knowledgeable has to do that. Somebody knowledgeable has to do that. If you don't have all the, if you don't read everything and study everything, I wouldn't do it. There's the possibility of a mistake. Okay? If the refund is $1,000 on person 1 and $10,000 on person 2, who do you think the IRS is going to want to look at first? The $1,000 or the $10,000? Okay? It's common sense. Okay? Okay. So, and I also want to say, not widely publicized, but it's true. Come argue with me. Self-prepared returns get audited much more often than paid preparer returns. It's the knowledge thing. It's the knowledge thing. Okay. So another reason why the and this is a big topic. This is a big topic, and I want if you don't get anything else out of this video, get this. Okay. Another big problem with self-prepared returns is ghost preparers. So you may have had somebody do your return. They're doing it on TurboTax or some free ass software program, and on the second page, even though you paid the person to do the return, okay, on the second page it says self-prepared in your name, but you didn't prepare the return. That is a no. If that situation exists, back up. Get away from it, because that's one of the hot topics with the IRS. They're looking, okay? You're self-prepared. They sent you a letter. You say, "Oh, I don't know. My cousin did the return." Okay? And but guess what? That's not a good way to start the whole thing. Okay? That's not a good way to start it. If you paid somebody to file your stuff, that person's name should be on the back page as a paid preparer. The ghost preparers are not cool. That's not cool, and the IRS could be auditing you just because they're looking for these ghost preparers. Okay? And then they'll also, don't get it screwed up. If refunds get robbed, ghost preparers are the ones that are usually behind a robbed refund. Okay. Benji, that's a great question. That's a great question. It's because they're slick, okay? They either don't want the responsibility or they're afraid to sign up with the IRS, which is kind of shaky. What are you afraid of? You probably don't meet the requirement of preparing returns, okay? And the other thing is, and this is one of the reasons why the IRS goes at them, is they don't want their income to be tracked. If I'm doing returns and I'm a paid preparer, the IRS expects on my tax refund to see that I got paid. Okay, I got to have a pretty good reason for not showing the money. Okay, people that stop by my offices and they share stories with me. They didn't get their refund. Can you help me? Guess what do you think? What do you think the problem is? They don't really know who did their return, and they can't get a hold of them. Okay, and they're afraid to call the IRS now. So that one's that. Make sure you use somebody that you can trust. And this is another very, very important point. At the end of the day, guess who's responsible for the tax return? You, the taxpayer. You're the one that I'm getting measured too. I'm the paid preparer. I want to make sure it's done right. I don't want to, waste my time, dealing with mistakes. Mistakes are always very, very expensive. But at the end of the day, I'm being scored, and you're responsible. You, the taxpayer, are responsible. Okay. So those are like the big four. This fifth one is really kind of like a New Jersey or New York thing. Okay. It pertains to your state refund. Okay. There's a handful of states. I'm going to say maybe there's about 12 or 13 states where the state check, the second check, is based on a percentage of what the Fed paid you for the earned income tax credit. So I'm not saying that to show off. I'm saying that because there's some meat behind that check. That's a nice check. That's a nice check. In New Jersey, I think it's this year. I think it's 40% of what your federal EIC was. That's added to your state. That's added to your state. Okay. If you live in Georgia or North Carolina, nothing exciting about that second check, unless you did a really good job of making sure they withheld for state taxes. Okay, but there's no like free money there. You're not getting anything from the federal EITC. Okay, so the state check in New Jersey and New York, there's some meat behind it. They're nice checks. They're notoriously late, but they're nice checks. So the problem is people don't always get them, and guess who they like to blame? Okay, they like to blame the preparer. Oh, he messed up my state taxes. I'm not getting my state. Okay, and this is what I have to say about that. When it comes to the state, okay, they are usually in certain states obligated to pay you a percentage, but they're of your federal EITC, but they're also entitled to double check some of the information. So what they'll do is, instead of like once they get their tax return, your tax return, and once it's accepted, during the processing, they may just say, you know what, let me send that girl a letter. And in the state of New Jersey, and New Jersey and New York are kind of different, okay? In the state of New Jersey, they'll say, okay, let me see a copy of her IRS account transcript, which shows the money that she had gotten from the federal for the EITC, because I have to give her a percentage of that. So I would just like to see that letter, okay? Then the other thing is let's take a look at the Social Security cards on the tax return, okay? They're going to look at those Social Security cards, and they're going to want to make sure everything, everything's clear, that you have one, okay? The second thing they're going to ask for is, let's take a look at, for her dependents, the birth certificates, okay? So what are we looking for there? We're looking for the relationship, okay? We're looking, if it's the mother, okay, that one's kind of easy. If it's the father, okay, we got to hope that the father's named on the birth certificate. If it's the uncle, we got to look and see. We got to kind of do a little mapping and tracing. Okay, so these letters are sent by New York and New Jersey very often. It's critical that you respond to the letter, and I'm going to explain to you why. And it's not a big deal. Okay. So they may ask, the thing that's usually toughest on that is if you have self-employment, you have to give them support for the self-employment. And if you go to a paid tax preparer, he's going to be familiar with, or she's going to be familiar with what they're looking for. The trick there is they're usually, just like with the IRS, they're usually looking for bank statements. In the urban community, there may not be a bank statement. There may not be a bank statement. People, like, who's kidding who? People are living hand to mouth. They don't have an account. Okay, they're paid cash. They go to extra with that cash. They take care of their business with cash. But that's okay. So that's not a showstopper. There's alternative documents to use if you don't have bank statements. A paid tax preparer will help you with that. Okay. Now, this is the most important thing that I'm gonna say. So if you don't, and this is kind of sad, okay? If you get one of these state letters, okay, and you don't respond to it, okay, that is going to be a problem because you're not going to get your refund that year, your state refund that year, okay? And so that's okay. All right, that hurts, okay? Now, if you don't respond to it, it gets worse than that. Guess what? The following year, when you file a tax return, after you send in that tax return, after it's been accepted, after all the checking, they won't send you the money. I'll tell you right now, they won't send you the money. They won't even send you the letter saying, we need this information. Okay? They won't even send you the letter. So you're sitting there kind of remembering that you had gotten a letter the year before and you not be understanding why you're not getting your refund this year. And I'll tell you why. You got to respond to the letter. It's no joke. It's usually a little tough to deal with because the state is usually slow. The state is usually slow and the tax office may have closed. You can't get a hold of the ghost preparer. You can't get, you can't find, you can't, and it's work. Okay, it's work. So in New York, again, the refunds are better. I think they changed, but they're still like they're kind of like at New Jersey level. They're nice refunds. They take this game a step higher and look for proof of residency. The state of New Jersey, if I do 150 of these letters a year, maybe one will ask for the proof of residency. If I do New York's, they're always looking for proof of residency. One of the toughies. So those are my 5 myths, my 5 hood myths, tax myths in the hood, okay? As I come up with more, I'm gonna post them, but I hope you liked this video. If you did, hit like and subscribe below. We will have more urban-related videos, okay? So with income taxes here, we gotta get back to work. But this channel we'll talk about income taxes. That's my favorite topic. I'm a CPA. But we're also going to talk about other things that are important that people will have questions about in urban community, in the hood. Things like housing, things like nutrition, things like daycare, not necessarily in that order, but that's just a few to list. If there's any topic that you'd like to talk about or you have any questions, and you want to give me some feedback, so the easiest way to you could go through this channel. The easiest way is we have a text number here that we look at every day, and we could respond to you. So you would have to text us. The number is, here's the number. I'm going to give it to you. Please remember it: 877-215-3002. I'm usually within 10 feet of that text number. So if you have questions, let us know. Thanks again. Thank you very much.